Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Good afternoon, everybody. Just wanted to take a second and look at our monthly close. On top, we're looking at Bitcoin, and we are looking at where we ended up on September. So September, we traded in a fairly tight range, and we opened and closed fairly close to the same price level. The open was 20,049, and the close was 19,425. So a difference of about $600. And the high to low, the distance between the very high and the very low was about $4,500, something like that. So to be about a 10% distance of the total is fairly, 10-15%. It means that it's traded pretty, it opened and closed pretty tightly. And as we kind of came down and had our large fear candle and our little dead cat bounce candle and then returned back to the bottom, we were looking at September to see if perhaps we would find a bottoming candle. And this is as close to a doji as we are going to get. This is what we got. It almost looks like a doji, but not quite. It's very it's questionable. Some would interpret this as a bottoming candle, and some might consider it as, that it could be a continuation. So what's unmistakable is that we've had large candles, and then now we've gone to small. So a lot of times how momentum will play out in a chart is you'll see smaller candles at the top of a move, and then they'll get bigger as they go. And then as we lose the downward momentum, our candles get smaller and smaller. And that for sure is something that we have. Now the question is how has this sort of played out historically? So I'm looking at our last move. This was the 2017 rise, and then our year-long 2018 bear market. And our large candle was here. I just lined it up with our large candle here. Even though this wasn't the bottom, it was essentially the month that we had a fear candle. So with two of these fear months lined up, this one proceeded to put in a lower low. This one, potentially the bottom was here, and we kind of bounced a little bit, and then moved back down here. We had our bounce. We had a little bit of a move. You couldn't quite see it because from the bottom to the top here is essentially our sort of green candle. And then our red is that even though we got up to here, we still closed down here. Now, the next one, in 2019, we were given a green candle. In 2022, we've been given this kind of strange sideways candle. And so what will happen next? I mean, there's some obvious differences between these two. Our 50-month moving average is up here, where we stayed above it in 2019. I'm just going to move the chart over so you can kind of see these are the next moves of 2017. After we had a nice solid bottom and some sideways slash down, we started building momentum month after month until we went to kind of an unnatural peak. This was unusual for all the prior cycles prior to the 2019, kind of early run. right now we have a brand new candle, so this one doesn't count. But are we losing downside momentum, and are we ready to travel sideways or get a slight move up? The good news is if October gives us any kind of a green candle, we will have a bullish engulfing because of how small our red candle is. And historically, Octobers have been decent to us. So there are a couple of those things that could help out. If I look at the 2014 experience, it might be even a little closer to what we saw I'm thinking this might be a little more similar to what we've experienced, because when we had our large fear candle, not only did we get our large fear candle, but we also did establish a bottom. So this is very similar so far, because we haven't seen a lower bottom. But the next month we did get a green candle, and the green candle was fairly weak. It was exactly like this because we did not recover 50% of our prior candle. So it was weak enough that we couldn't quite get it, and we ended up with 3 thin months before we started our turnaround. And this I would not call it a thin month. And so, but here, this candle is very reminiscent of this candle here. And so historically, from the timing of our large fear candle down, we're normally running out of downside momentum. Usually the fear has essentially drained out of the market. Even though things have been flat or uncomfortable, they've been, it ended up that we started building momentum. If I move over a little bit, we weren't fully out of the woods for a little while, but then we finally started climbing. So I'm wondering if this will be a little bit closer to the experience that we will have coming out of this new month. So very, very interesting. There's a lot of reason why we should be bottoming. We're about as low as we ever get. I'm going to go back to just our current chart and we can kind of look at some of these things. But if I zoom out, one of the things that's really interesting is that if you notice our RSI down here, a low RSI number usually gives us the most oversold situation that we see in a chart. And we've looked at RSI on the weekly and other things. The weekly RSI dropping below 30 was essentially the bottom for all the prior cycles. And it could be for our current one, as long as this really is the bottom. But I'm looking at this drop here, our bottom of 2015 bear market. The value of our lowest point in the RSI was 44.5. And we did not get lower than that all the way through. And then we had our 2017 high, and here's not necessarily our lowest. So let's see. 44.5 was our prior. This one gave us 43.83. And that was the final red candle. That was January of 2019. So 43.83 is our lowest we've ever seen. And then we proceeded to recover. So now currently, our initial candle down is 41.66. So we're already, from a monthly standpoint, lower than we've ever been. We had our little bounce, so that brought us back to 44, but 42.25, and finally we just ended our candle at 41.90. So yeah, so our lowest was our initial drop here. We don't have a close on our current candle. It's at 41.85. So if it was flat, we would go essentially flat. But if we have a red candle that's of any decent size, we might actually go below this. But you can see that the RSI is lower than we've ever seen in Bitcoin's entire history. And so there's a lot of reason to think that we are oversold. So there are a couple of things that make me feel like my positioning of thinking that perhaps we're there and we need to see a little bit of green is supported by some of these monthly, the monthly activity. We kind of almost need to see some of October before we can really get a definitive conclusion. But so far, this would have signaled the bottom from a monthly standpoint. There's a lot more factors at play, especially now that we're starting to mirror the broad markets, and broad markets definitely have a lot of pessimism. This morning I was looking at some articles that said retail has put more, the put call ratio for retail is higher on the put side, meaning more retail, unsophisticated investors have puts in on the broad market than ever before in history. And there's a theory called Max Pain theory, and that is that the majority of people end up feeling the most pain. So when the majority of people bet on the downside, whales and banks love to steal that money, and they will push prices up just to liquidate those puts. I would not be surprised to see broad markets move in our favor, and there's just a lot of things at play. And I've already said, if the broad markets give us a break, there's a lot. Bitcoin could really bounce hard and take advantage of that release of pressure from those broad markets. So a lot to think about. Let's look at the Ethereum close, though. I just have Ethereum on KuCoin, so I don't have as much history. But the Ethereum close actually was quite impressive because we did find support on the 50-month moving average. Here we had kind of a slip down and recover directly after, but here we have pretty much undisputed support off of the 50-month. So the low was 12.18 and 12.06 was the monthly. So it was within $12 difference, which is, every technician will call this support for sure. So Ethereum looks quite strong, and if we are sort of going into a sideways oscillation, it would be pretty normal. I mean, if we had one final touch on the monthly and then a move, that would completely be normal. But I'm really feeling like the worst of it is over. I mean, a big candle here to kind of flush out the rest of the bear momentum, and a strong bounce where we have a greater than 50% close. This removes a lot of the downward pressure. So even if we have a couple more months, we're starting to level off and move the right direction. So the monthly chart seems pretty positive to me. I feel like it wasn't as pretty as it could have been, but this is definitely signaling a slowing in the downward momentum. And especially, historically, the further we get away from our initial drop, the more things should level out and eventually start climbing. So those are my thoughts on the monthly close. If I go to daily, let's just take a look at a couple of things. Yesterday, we had a fairly bearish candle. So, but see, this is okay. In my mind, I feel like, hitting these lows and climbing up to new highs, it's okay to have a few days of sideways, which is what we're kind of experiencing. We should see some kind of a move to the upside. And you can see that we've had 3 attempts. You've got 3 long wicks where we're attempting to move up pretty significantly, and they got rejected. I don't think that we're going to see the end of our attempts. I think that we're going to see more. This one would be a technical rejection off of the 20-day. So that explains today being a little bit red. Of course, we still have an hour, but we're getting there. So anyway, from a Wyckoff standpoint, generally after our spring, we come up and we will find support on our lower range, and then we'll find a higher support. So if this was our support on the lower range, then that is awesome. If we have a day or two where we establish a higher level of support, then it's going to start looking better and better. And we may need a little bit of a dip to give our market a little bit more strength as we battle the 50, which is coming down. We really want to, the next time we touch the 50, we want to destroy it. We want to bust through it. So anything we can do to get a little bit more strength and establish whatever correction we need to gain footholds as higher support before we bust into this, the better it'll be for us. So these are pretty good building blocks. As long as we don't start showing so much weakness that we establish a new low below our trading range, because that would be extremely bearish. So anyway, that's kind of how I'm interpreting the daily on Bitcoin. And with Ethereum, I'm actually kind of at a loss of words. I'm so surprised to see this much sideways action, where we have so many long wicks and candle bodies that are so small in comparison, just over and over and over and over, really shows that there are a lot of forces at play. A lot of people, a lot of whales, a lot of retail battling it out, not entirely sure which direction the market is supposed to go. But whenever markets hit a bottom, I am never afraid to see a sideways consolidation, because long consolidations, they start intense directional movement. So the break, one way or another, after a long sideways consolidation is going to be explosive. And in our market, normally after a leg down, that explosive move should be to the opposite, should be upwards. So this I'm just letting play out. I'm not really concerned about it, but I am patiently waiting for a move, and I think we'll get one at some point here. I wouldn't expect this to last much longer. Historically, I don't think I've seen Ethereum go sideways for 2 weeks, and we've got about 10 days of sideways on the books. So I would expect a hint of a direction this week. Okay, that's pretty much it. The only other big movers, the biggest mover was this RSR, and it has become a pretty good looking trade so far, above the 200. Hitting our first initial take profit is going to happen around I think 12 something. So that'd be pretty cool if that hit tomorrow. And the rest of them, I noticed that XLM was moving a bit today, and so this chart's looking prettier. Everything that's moved into the 100 and 200 has pretty much stayed there. So I think alts are getting a little bit itchy. But yeah, nothing's going to move until Bitcoin and Ethereum really move. If we can get a decisive move out of these and we start moving to the upside, I know that the alt market, whether it tries to go faster or slower, we'll certainly start seeing some green. Anyway, those are my thoughts for today. Anyone on the pro channel, there's twice a year that my religion does these conferences, and they go, it's 2 hours on Saturday and 2 hours on Sunday. And then at 6 o'clock, which is when our market closes, we're having another session that's like an hour and a half. So I'll do the pro video after that. There's not a lot of changes happening. I've been kind of watching, but there are a couple of adjustments that we'll make to some of our trades. So just a heads up that I'll be a tiny bit late today. And other than that, since it's Saturday, I will catch everybody back Monday morning. All right, have a good weekend. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.